Hello traders, Gary Wagner here just before 10 o'clock in Honolulu, 4 o'clock in New York on Wednesday, 3rd day of June 2015, and this is the daily report for gold and silver. What a day we're witnessing as we have a solid sell-off in the market, and that sell-off's holding. In other words, we don't have the conflicting push-pull of a weak dollar or strong dollar to really limit this move down. Currently trading 11.85 and change, puts it off about $9.30. Of course, we did initiate a short position in the market, so that position is now moved into the money, so to speak. High on the day is 95.60, low is 79.10. Silver also trading lower on the day, actually off about 1 3/4%, down about 30 cents. 16.50 is our current print. That is with a low of 16.37 and a high of 16.79. Traders that went short gold and are also looking to initiate short positions in silver, you can go ahead and do that now. But gold is really the primary market that I'm going to watch on this particular sell-off. We'll touch on gold in just a little bit. So I want to start today's show by looking at some gold charts. We're going to start with some real short-term studies. This is a 4-hour chart. It is in Japanese average format. We have MACD on the bottom. We also have our current Elliott wave. Again, very, very short-term wave count on the top. I draw your attention really more than anything else to the MACD. And we talked about the fact yesterday. We initiated this trade on yesterday's show. We said aggressive traders can just go ahead and enter the market. All traders should now be short at this point. We have broken through substantial areas, and my sense is that we're probably going to come and test, all things being equal, that is. In other words, without any new data points that we're not currently factoring in, we could see the market test right now as low as about 1140, and that's kind of what I'm looking at. When we look at the MACD, yesterday we didn't quite get our cross, but there's no doubt about it today. Let's go ahead and blow this up, and you can see that we've got a solid cross on the MACD, signaling a downside move. You can also see this first momentum bar right here, and that is now on the negative. When we look at our short-term Elliott wave count, and I don't really want to focus so much on short-term. Short-term is really good for trigger points, in other words, for when we're going to actually initiate the position. But on a short-term basis, we do have the solid sell signal now in play here. And also, when we take a look at our current Elliott wave count, we are in a wave 5 down short-term. That wave 5 down should take us below this 1180 point, and so therefore our marks right now are about 1170 and then again at about 1140 to 1150. That is where the Elliott wave models are telling us that we could see gold travel to. So traders, in terms of an Elliott wave count that I'm actually putting some very realistic weight to, because it's using our daily charts, is the one that we're looking at. Now, this is a straight candlestick chart. Elliott wave count is really set to what's called the original values. And when we look at it and look at the dynamics, we know that we've been in a bear market, therefore a bear count. I'm going to take it from the top here, which is right around 1300. As I said, we get a wave 1, we get a wave 2, we get this long wave 3, wave 4 completed, and we're currently in wave 5. As I said, our projection for wave 5 could be as low as 1140, which would test these recent lows down here that we had in November of last year. And traders, I am now bringing up a half-a-day chart, Japanese average format, 720 minutes. And really what we're looking at in this chart is we're still either completing this wave 3 or still in wave 3. But most importantly, what really is noteworthy about this chart is when we put in our channel lines, you can see that we've absolutely been in this downward slope, and we've been in this downward slope really since about the 17th of May. So traders, what about silver? Well, as I mentioned at the beginning of the program, all traders should be short gold at this point. We are recommending that for those that are trading silver, you can go ahead and add that to the mix. In other words, initiate a short position in silver at the market. Now, in terms of where you want to put your stops, and then we'll talk about our targets. Really, the only place that really makes sense, you've got $17 per ounce right in here. And as you can see, you've got these tops. Again, a daily chart, light activity, but except for this one, and that's the one thing about silver. Silver can have these tremendous spikes because of the liquidity in the market. It can be rather thin when you compare it to gold, and therefore, smaller orders will tend to have more of an effect on the market. When I say smaller orders, I'm talking about big bulk orders, but big bulk orders that maybe wouldn't even move an S&P or a bond contract can move silver because of the volume and open interest. So you want to place your stops above 17. And in terms of where I think this market could go, we should see some sort of solid support maybe at 16, but we'd have to see ultimately, and then 1550. Those are the two levels. MACD is absolutely crossed. So traders that do want to initiate short in silver, go ahead and do that. Everybody should be short gold. This has been Gary Wagner wishing you, as always, good trading. We'll talk to you tomorrow for another daily update and review. Bye-bye.